Hello, intermediate accounting students. This is Dr. Paz here to continue to discuss your portfolio project. In the first part of your portfolio project, you completed the journal entries tab. So now in this part, I want to go over with you your T accounts. You can't possibly record the T accounts until you've done a journal entry. So I would recommend here that you record all of your journal entries and then in your journal entries tab, as you see at the bottom of this Excel spreadsheet, and then go ahead and record the T accounts. So here you see cash. Remember, you always have your beginning balance, and here you have to note which accounts have a debit balance as their natural balance and which accounts have a credit balance as their natural balance. Then you are going to record all of your dates here, and then you're going to record the debit or credit. So here, if we have January 5th, $30,000 credit in cash, we'll need a corresponding debit. And so then you're going to do all of that, get your totals at the bottom, and then whatever the balance is. So in this case, 1.553 is greater than 1.020. So we have $532,608.50 as our balance for cash. And you're going to do this throughout all of your accounts. So here you have accounts receivable, allowance. Remember that allowance for uncollectible accounts is a contra asset account, so that has a credit balance. And so make sure that you are recording the beginning balance and all of your write-offs correctly. We have office supplies inventory here with the balance, and then we just continue to do this throughout. So then you're going to have product inventory, which is also a debit balance. Prepaid insurance, which is an asset, is a debit balance. Land, keep in mind, land is not depreciated. Then we have the beginning balance of building, and we hadn't purchased any other buildings. So then we have accumulated depreciation, which is also a contra asset account. So that will have a credit balance. Then we have equipment, again, accumulated depreciation on the associated equipment. And then we have accounts payable here. And now accounts payable is the start of our liabilities. So you'll see that has a credit balance. We continue on to wages payable, federal tax payable, all of your state income taxes, your Social Security payable taxes. And this is probably the most difficult part of this assignment, I would say, are the payroll taxes. So keep in mind, take a look at these balances here and make sure that your portfolio project coincides with that. So we have the Medicare payable, the state unemployment tax payable, federal unemployment tax payable. It has zero because we're just a pass-through entity for that as the company. So that gets paid. And then we have healthcare payable that has a $7,000 balance. Then we go into prepayments and deposits that we are getting. And this is a liability account. Interest payable, notes payable, and now common stock is what starts our equity accounts, right? And so again, equity is a credit. And then we have additional paid in capital, which is any amount in excess of par. Retained earnings, we have a beginning balance, dividends that have been paid. Then we start with our revenue accounts. So then you have our sales revenue, our cost of goods sold, utilities. So remember, revenue is a credit, cost of goods sold is an expense, so that has a debit balance. Same with utilities and wages and payroll taxes and all the fringe benefits and all of the other expenses. So those are all debit balances. Keep in mind, we have a loss on the sale, and then we have interest expense. And then we have several just items here that kind of show us the layers of inventory. So this will help you to calculate your inventory valuation. So I hope this has helped you in kind of formulating your T accounts in the proper format. I'm going to go right back up because cash is one of our biggest accounts that has the most transactions. So you can see that. And hopefully this has helped. Thank you for watching.